Yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance bro. And today, as you see the title of the topic, the financial impact. So there's a really important topic that goes on in the Black community, which is this mating and dating thing, which seems to be the hottest topic in the Black community in terms of social media consumption. Everybody wants to pop the balloon or get this chick or get that chick or learn the game or level up with men and this, that, and the third. And then we talk, a bunch of bullshit about generational wealth and how we want to pass wealth down and this, that, and the third. But we make some really asinine decisions. So today I want to talk about a couple of those things. So for one, I want to bring up the topic of this young woman in Detroit whose children froze as she asked for help from the city and the children's father. So it says here, the mother of two kids who died from suspected hypothermia while sleeping in a van in Detroit Sunday night said she tried her hardest to care for her kids. Tatiana Williams reached out to the city for help, as well as the father of the kids who would later die, but never received assistance. A GoFundMe was set up to help the Detroit mom while the city is reviewing its homeless outreach strategy. It says, you can't pass down generational wealth with multiple baby daddies or baby mothers. You really can't. Hey, you can pass down some generational trauma, but you can't pass down generational wealth. And it vexes me that I am able to, when I go live, and I don't do it with any sort of consistency or anything, so I can understand why people have other things, scheduled out throughout their day. But we got brothers up here who will review a whole and roast a whole panel of niggas. Oh, these motherfuckers are this, that, and the third, and some bitch ass niggas. And you'll have 45, 50, 100, 200 people in there. But when we're talking about what actually does things, we got 3 or 4 people in the box. I'm very grateful for the 3 or 4 people in the box because it shows that you guys are actually trying to do something to make an impact. Because the reality is, yeah, while this insurance shit is boring to learn about, to get talked to about, it ain't boring when you spending them checks, right? If I were to go, hold on, let me just go, Senator Ron Wyden against PPLI. And then we're going to get into more what this topic is about. But, right, this shit is boring. That's what people tell me. Oh, this shit is boring. This shit is boring. Until I show y'all something like this. Senate, finance.senate.gov. Right? Where I show you life insurance made up at least $40 billion in policies of motherfuckers not paying taxes. Now that shit gets interesting. But now it's out of your wheelhouse to be able to spend the money on with which it needs to happen. Me and Rael was on a live. And we were talking to some gentleman. A guy, what the fuck is his name? Ramil Amir, supposedly talking about fix and flipping real estate with $500. Here's another issue, folks. Y'all got to get your put your money where your mouth is. I know it's not boring to you, Hannibal. That's why you're here, right? Because the reality is, you know, the things that we consume are why we're able to consume what we're able to consume. You know who it was boring to? I'll show you who it was boring to. Right? It was definitely boring to this young lady. She was definitely not trying to hear about no life insurance. But now them 2 kids that passed away, she got to raise a GoFundMe. Do you think had she had life insurance on those children, she wouldn't be trying to raise a GoFundMe? Maybe it would be able to put her and her other children in a better predicament. So the financial impact of who you decide to lay with is a huge thing. Because who you lay with dictates things like the help you're going to get. Right? Black men and black women. Black men, we got to stop picking women who will go ahead and go through all this, because the reason she didn't give custody of those children to the father is because she wanted to get some kind of benefits. Because that happens all too often, where the woman is like, oh, no, I'm not giving up my kid, because if you give up your kid and give custody to the father, you then lose out on your Section 8, your weekly checks, your monthly checks, your food stamps. But men at the same time, stop putting babies into women who you wouldn't give your last name. If on both sides, if they're not worthy of being married to, then they're not worthy of having a child with. Because we keep saying this bullshit about, oh, well, I can't see myself spending the rest of my life with this person. Well, then, if we can't listen, or if we can't imagine ourselves being with that person for the rest of our life, then we shouldn't have a child with them, because we're actually attached to them for the rest of our life, outside of paper. And that's very dangerous. Again, that adds to the financial impact. Shout out to Cherie of Black Women Making Money, Upwardly Mobile Black Women. Do I agree with everything she says? No. She doesn't agree with everything I said. But we will tell you that you need to be in a position to financially care for yourself and your children. As of 2015, it was about $300,000 to raise a child from 0 to 17. As of 2025, I'm sure it's about $500,000 to raise a kid from 0 to 17. DLM says generational wealth with no multiple lineage of family structure. Exactly. I'm going to show you guys, and salute to DLM. I want to show you guys something that's really funny. Before I get into that, let's take a look at this statistic. Let's take a look at 10 common reasons for divorce in 2024. And this is from Petrella Previtera LLC, a law firm. Right? And if you'll notice, their practice areas are family law, divorce, spousal support, child custody, and estate planning. And as we know, estate planning is the money. So if we look here, key takeaways. Top 10 reasons for divorce. Number 10, unforeseen circumstances. 9, constant conflicts. 8, DV. 7, cultural and religious differences. 6, addiction and substance abuse. 5, unrealistic expectations and unmet needs. 4, infidelity. 3, financial disagreements and stress. 2, rushing into marriage. And 1, lack of commitment. If you ask me 1, 2, 5, 9 and 10 could actually be just one category, to be honest, because they are. The way we act toward each other is disgusting. But let's take a look at number 3, right? So it says financial disagreements and stress, because realistically, that's one of the major issues in a lot of relationships. So finance matters can cause significant tension in many relationships. One survey established that 35% of people cite financial issues, especially debt, as the leading cause of stress in their union. In another study, 54% cited debt as a major reason to consider divorce. So again, when we're talking about, he says men do allow this behavior. One could say marriage is the type of class separation. Well, marriage initially was for the wealthy, right? It was to commingle wealthy funds, right? So it was, if I come from, an aristocracy family or a wealthy family, I want to marry my daughter or my son into another wealthy family. It says actually men are the reason why generational wealth doesn't get passed down. You can't blame baby mothers because men create baby mothers. We're going to get into that. And I'm also going to leave I'm going to open the panel so that people can actually come up and speak their mind once I get through a little bit of this. But you're absolutely not wrong. Men do create this, right? Because we create babies' mothers. Right? So let's look at it. Some of those issues include financial infidelity, bringing old debts in your marriage, opposing attitudes towards money, impulse buying, attending to extended families, and mismatched financial priorities. So let's start with mismatched financial priorities. This is where you'll have maybe the lady who wants the Birkin bags, multiple. But we also have to realize why luxury items and goods were made the way they were and were priced the way they were. Initially, luxury items and goods were made and priced the way they were because they were made of quality. So they were made to last a long time. He says, one could even say marriage was definitely about protection during Jim Crow as far as blacks and Negroes go. Absolutely, AP. And like I said, I'm going to drop the link in a few minutes so that we can all come up and speak our piece on it, because I want to see differentiating and similar opinions. But mismatched financial priorities is very easy because, sometimes maybe the woman wants to get into the marriage because she thinks he's going to buy her a brand new Ferrari every 2 years and Birkin bags every 2 years. And maybe he has the means to do so, but maybe he doesn't do so, right? That's not something that's in his wheelhouse of thought of doing, right? Maybe it's the baby's mother who thinks, hey, listen, I'm going to be on Section 8. I'm going to be a welfare queen. And maybe the husband is like, no, I don't want you to be a welfare queen. I work for mine. I pay my bills. I don't need my rent to be $12 a month to live in this subpar housing unit where, we're infested with rodentia, right? So those can be some of those mismatched financial priorities, right? I'll give you a anecdotal example, but it's in my real life. So my wife is going for her driver's license eventually. And when she gets her driver's license, I want to purchase her a Mercedes. Broke Genius was good. She wants a Chevy Malibu. Now, the reason she wants a Chevy Malibu and she's partial to a Chevy Malibu is because she's been in a couple of car accidents in Chevy Malibus and come out unscathed. And my opinion of that is, well, then you shouldn't be in a Chevy Malibu because it seems to attract accidents. That's why you need to be in a Benz, right? But those are different. Those are mismatched financial priorities, right? Because the cost of a used Benz is the cost of a brand new 2025 Chevy Malibu, right? So she could get a 10-year-old Benz or a brand new Chevy Malibu. That could be cause of contention in our relationship. Attending to extended family. So this one is also something that's very common in relationships, mating, and dating, especially when we're looking at the Black community. And AP, I definitely want to address this comment here, right? Because what you're looking at is, oh, I got to go help my mother. I got to go help my auntie. I got to go help my... Listen, I'll give you, again, another anecdotal. He says the Chevy Malibu was not designed by a woman. That's probably why women like it. My wife had a situation where a relative of hers died. And it was sudden. And this is why things like life insurance are important. Multiple policies. Okay, I got a policy that's going to pay for burying me. But what about the fact that there's people in other states who want to come see you? We don't just have expendable cash to just go and, attend your funeral. That means I got to take time off work, which means I'm not being able to feed my family that's currently still living. So my wife wanted to go and attend her uncle's funeral. I said, I'm not going because we don't have it. And unfortunately, when I tried to talk to my family about life insurance, this often happens. And guess what? I don't go to a lot of funerals because you expect me to take out of my pocket to come pay last respects when you could have paid respects yourself and had it set up so that, hey, I want your all to come to my funeral. Listen, I got this small $20,000 policy to pay for tickets for everybody and to pay for hotels or Airbnbs for everybody to come to my homegoing service. Right? But we don't look at it in that manner. And this is just life insurance. This isn't even all financial aspects. Right? But she decided, well, I'm going to take a 401k loan out to fly to South Carolina to go to his funeral. I said, well, you know what? I'm not going to not sign off and let you take this 401k loan. But just know that you're robbing from us because this is our retirement. Right? We need that money when we're older to fucking live off of. Your uncle is dead. Loved him, but he's dead. Ain't nobody looking to help us. Yes, I understand you want to be comfort for your family. I get it. But ain't nobody looking to help us. My younger cousin thinks old people have easy cost to low cost life insurance. I had to educate him. That's not how it works. Yeah, a lot of people don't know how life insurance works. It ain't like trying to go and apply for a job at Walmart where you just apply and you get it. And that's not how it works. Applying for Walmart either. Impulse buying. I'll use my relationship again. This is something that I have an issue with. I am an impulse purchaser. I get money, it might burn a hole in my pocket. I want to go get a new suit so I can go present myself to potential clients and say, hey, look at me. I have these fine clothing items on. You should feel comfortable investing with me, so on and so forth. It's an unfortunate thing, but it's the uniform we have to wear in our field, right? Opposing attitudes towards money. So that might be, hey, I think we can get low-cost life insurance when we're old, right? So I'm not going to get life insurance while I have a mortgage and a wife and kids and car note and student loans and all this other stuff, which is asinine. But maybe you have somebody who's a spendthrift and someone who's a saver, right? So somebody who's like, hey, listen, man, I get paid every week. I'm going to burn through this money. And somebody who's like, hey, let's stack a little bit up. And you have opposing attitudes towards money. Bringing old debts into your marriage is something that's very easy to do. Before I got married to my wife, I had to realize she has student loan debt. And she has quite a large amount of student loan debt to the tunes of a couple of $100,000. Well, when I marry her, what's yours is mine and what's mine is yours. And so I was having a conversation with my brother, and I was like, hey, what do you think about me marrying this woman? He was like, well, what about, the debt? Because you're going to have to, God forbid something happens, you're on the hook for that debt when you marry her. And you know what? That's absolutely true. A lot of old debts come into marriage. Child support, right? If you have child support and you marry a woman, she's on the hook for your child support. So if you lose your job or something, they're going to come after her money for child support. So ladies, that's something to think about. Men, that's something to think about. Child support. Alimony. If you're paying alimony or spousal support when you divorce, the wife may not, or the receiver of the alimony, because husbands can receive alimony too, but that person may not decide to get married ever again, so that you have to keep paying alimony. Now, when you marry someone else, they're on the hook for that alimony bill. Financial infidelity. This one is a little harder to explain, but think of it as you're a husband. Your wife goes to the department store every week, puts stuff on layaway, buys stuff, leaves it in her car, puts it in old bags, sneaks it in the house so that you can't see she has a shopping addiction. This is a guy who you buy a bunch of parts for your car, and you got to hide them from your wife. Or I'll give you guys even a better example. When I went to the gun store to go purchase a second gun, the guy there was like, I was like, man, I don't know if I should do this. It's another $700-800 on a handgun. My wife is probably not going to be happy with this. He was like, well, just don't tell her about it. Hide it. That's what a lot of guys do. He said, but just know, don't give it to her, because I've had wives come in and curse me out because her husband bought another weapon. These things happen. That can be financial infidelity, where you're not being upfront with your partner in regards to the money moves you're making. Right? You have to be upfront with your partner in terms of the money moves you're making. It's absolutely important. It's an absolute necessity. I'm going to put the link in the chat. Anybody wants to come up can feel welcome to come up, and we can have the discussion. But that financial impact, just like that young lady, I'm going to stop the screen now, but just like that young lady, her 2 children froze to death. And then people are saying, well, where's the father? And again, the father may or may not be in the picture, but what should have been thought about way beforehand, if you're homeless and struggling, you probably shouldn't be procreating. right? Because you can't afford these children, which means that you're creating more problems. So I want to go through some of these comments while I wait, because these need to be addressed as well when we're looking at the financial impact of marriage, of who you lay with, right? So you can't pass down generational wealth with multiple baby daddies or baby mothers. That's absolutely true. Even if you have life insurance, assets, real estate, all these things, you can't pass them down with multiples. Why? Because it's going to go through probate. You're likely, if you're not responsible enough to vet who you're laying with or who you're marrying, then it's likely that you're not responsible enough to have a will and final testament. So it's likely that you're not going to be able to leave the real estate, the stock, the whatever assets you think you have to whoever. Your best bet, ironically enough, is to get a bunch of life insurance policies. Why? Because I can't pass down I'll give you again a real life example. My grandfather, who's 86 years old or 89 years old, is currently just released from prison after doing a 20-year stint. And what's good, Hannibal? Let me finish this and then I'll get right back to you. So
Yep.
he's from a 20-year stint, and he has land in Alabama. Well, that land in Alabama, he tells my mother, "Hey, yeah, I'm gonna leave this to y'all when I die." Okay, how you gonna do that when right now you got relatives living on that land that've been living on that land for the past 20 years? You don't have anything on paper that says that transfers to us. So you're going to die what's called intestate, because you don't have a will and final testament. So you do, when you don't have a will and final testament, you actually do have one. You leave it to the dictatorship of the state that you're in. He's in Texas, so this land in Alabama ain't going to me and my family. I don't care. I'm not going to go through what needs to be gone through to get it. I've tried to with my family. They don't listen. I can't go through that anymore. But I'll pause there. What's good, Hannibal?
Can you hear me? Can you hear me? Oh, shoot, it's probably low. All
Yeah, I can hear you.
right, yeah, yeah. Just making sure my mic is clear, my background not too loud. I am at work right now, but I just wanted to speak on, how men we set ourselves up for failure. And why I say that is what you just talking about, having multiple baby mothers. You're not going to leave your children with nothing. It doesn't matter how much you love them or care about them. Why would you do that to yourself and then to your children? Y'all, the children are going to fight about who gonna get who. It's a whole. I'm trying my best not to curse, but it's a messed up situation. And I also find it funny that it's a lot of women talking about generational wealth. Now, I may be wrong, but I just don't remember women actually being responsible and doing that. So the best thing I can say for men is just you gotta learn how to control yourself and just make the best decision. I don't want to, take too much of your time because I could keep going on. So you can add on.
Oh, totally, man. Listen, that's why I dropped the link. I definitely want to let people come and express their opinions. And what you're saying is absolutely true, especially when it comes to our community. Realistically, what happens is it does fall on women as well, but here's how that works. It's the man leads, and let's look at, I'm in my 40s, right? So, it used to be, hey, the pop would leave the house to grandma, right? Grandma would then have the house. But the unfortunate thing is, again, because Pop didn't set up any will and final testament, grandma doesn't. And she just, like I said with my grandfather, just leaves it. Oh, yeah, y'all gonna inherit it. And unfortunately, without it being on paper, That's why the situations have gotten worse. Younger generations are inheriting nothing. The average life insurance payout is $168,000. That's not going to do anything for anybody, right? So what you're saying is true.
Yeah, even if you have life insurance policies for your children that you have with multiple women, I mean, you're really gonna have to live a frugal life to make sure that they're good financially when they get older. But what I see is everybody with these up-to-date BMWs and all this European clothing. And I'm gonna drop the mic right here.
So you're definitely not inaccurate, right? And so I'm a little bit of a label whore myself. And the reality is, you do have to enjoy some stuff whilst you're alive. But like you said, when you're leaving life insurance to multiple baby mamas or multiple babies from multiple baby mamas, you got to be frugal because you got to know how to do this and that and the third. And here's the thing that we don't understand about life insurance, especially the Black community. The life insurance company doesn't get an alarm when John Smith passes away. We don't know that John Smith passed away. So we're not going to be seeking out John Smith Jr. to give him this check. We're just going to be like, oh, John Smith was paying it automatically, and then suddenly the payment stopped, lapsed the policy, right? We're not looking at the fact, hey, John Smith's payment stopped. Maybe we should check and see if he's still alive. That is on the children or the beneficiary. And then we don't even learn, because generational wealth is not just leaving money. It's leaving the knowledge of what to do with that money. Right? And again, one of the biggest, most important things is who you lay down with. Hannibal, you said it best. Laying down with all these women. Listen, the jiggly jiggly looks good. Don't get me wrong. I love seeing some nice jiggly jiggly. I'm sure you love seeing some nice jiggly jiggly. But is all the jiggly jiggly worth laying down when I'm trying to create an empire? No. Because some of that jiggly jiggly is just that, jiggly jiggly. No more, no less. There's no substance behind it. So that jiggly jiggly will go ahead and get me, oh, I done had a baby. Okay, cool. Well, how is this woman with this jiggly jiggly going to raise your child? What morals are they putting in? What are they thinking of in terms of education? Or do they want you to be the next baby Jordan or LeBron James? Okay, well, what are you going to do about my son being the next LeBron James? Are you going to bring him to the AAU games? How are you going to sit him in a van and make him freeze so that you could keep getting child support off of me? Whereas you could have been in a position to benefit more from actually being with me. It says, in my opinion, the women are weaponized to destroy wealth and training the minds of the youth. I wouldn't disagree.
Yeah, I
But
wouldn't disagree with that either. But at the end of the day, it's the men. It's the men. I know what women are doing. It's the men because you should, if you want a family so bad and if you want children so bad because you feel as though that that's what's gonna make you a man, then s- your estate.
mhm.
Build that. Set that stuff up, set the paperwork and everything. And then when you get the woman pregnant, you can start right there. You already know the child name gonna be whatever, whatever. Set up a trust fund, insurance policy, bank account, all of that. A lot of men don't do that. They wait until the last minute to do things. I haven't heard not one black man say, when I knew I got this woman pregnant, I, I set up a trust fund, life insurance policy, and I opened them up a bank account day one when you found out she was pregnant. So by 9 months, you should have been stacking some money in that account, right?
Woo!
Because you want your child to go to college, right? Or whatever. The first 9 months before the child was born, you should at least have 2,000, 5,000 in the account before the child touches earth. This is why I don't listen to a lot of men because we want to say how delusional women are. It's men. And we don't give good sound advice. We just out here winging it, just taking a risk. And we think taking risks all the time is a good thing. And it's not. Sometimes you have to minimize your risk. But that's all
Absolutely.
I gotta say.
Yo, you just dropped a bomb right there, right? In the fact that a lot of black men, yeah, my baby mama pregnant, and right there, the first thing you should be doing is, okay, let me get a life insurance on me, because if something happens between now and the 9 months before this baby is born, because it happens, especially with the lifestyles that some of us live, and I'm not even talking about illegal, I'm just talking about unhealthy, right? Is men having heart attacks at 40. I just got off of a TikTok live with a guy who had 3 heart attacks in 60 days. He was in the hospital for 47 days. Right? Now he's in his late 60s, but still, this is things that we don't do. Hannibal, you just said something immaculate. I ain't never heard a brother say, okay, I got a baby on the way. I'm going to start a trust fund, a life insurance, open a bank account, right? And they can even do this. A lot of this can be done, ironically enough, through life insurance. So you get the life insurance on you. Baby's born 15 days later, you get a life insurance on them. That's creating a trust for that child. You're not getting the life insurance with the expectation of that child dying. You're getting the life insurance with the expectation of building cash value over that child's life. So now when that child is 18, they got 5, 10, 20, $100,000 available to them, depending on how you set up the policy and how you put money into it. Right? We got people like DLM said. You got millionaires like 50 Cent and Jamie Foxx with sons who they can't transfer wealth to nor train them. But is that the baby mother's fault? Or is that 50 Cent and Jamie Foxx's fault for going, oh, this jiggly jiggly, she got a fatty, I'm going to hit that. And not thinking about, wow, what is this woman going to, what lifestyle did this woman live that she's going to impart on my child? Because we also are quick to give someone our seed, but not our last name. Go ahead, Hannibal.
Yeah, but I say it's like we caught up in this lifestyle. It's a lifestyle movement. And why is that? Because of men. Oh, I got this money. I could just pay. So I don't have to deal with her, et cetera, et cetera. And like you said, you should want a woman to have, your last name. So the child won't go through, a lot of chaos and confusion when they get older. And we just not talking about society talking about them. We talking about financial situation. You never know what's gonna happen with the father. And now
Exactly.
you got your child out here with a whole different last name than you, or he may got your last name, but still you got to deal with the mother because she's going to try to lay claim to that what you left for the child. It's a
Exactly.
like I said, I'm just focusing on my people. We encourage this type of stupidity. And that's why, me personally, I say it got to be a pause on a lot of stuff so it can be corrected. But I'm glad you speaking about this, and I'm gonna hit you up this weekend over the email, and then we can go further because I was left for a life insurance policy. I'm grateful for it. I want to get my stuff in order too. I want because you've been saying a lot of stuff over the past few weeks. I've been listening. I said, yeah, I need to double down and get this going right now.
No doubt. We'll definitely link up.
Yeah.
Uh, Even what APTV is saying right here, one could even say marriage was definitely about protection during Jim Crow as far as blacks and Negroes go. So, Hannibal, to your point, as black men, if we want to have this title, HNIC, King, Boss, because there's a bunch of funky dudes running around. We was gangs. And, I spoke to a brother the other day who was like, oh, I don't believe in I don't trust the life insurance, da 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 da. Because back in the Egyptian days, I said, hold up. When the pharaoh passed, right, and they put him in the sarcophagus and mummified him, and they put him in the pyramid. What did they put in the pyramid with him? Riches and gold, so he could take wealth to the afterlife, aka life insurance. Now, did they do it a little differently? Yeah, they left it for him instead of his people, his children. But trust me, the pharaoh's children inherited great wealth, right? So again, we talk about marry before you carry in a lot of these spaces, but we don't talk about the fact that, like you said, the men, it's on us, right? Now, am I absolving women of everything? No, but the men, that's why you have a lot of men who today are hyper emotional, because we were raised by women. We were raised in a house full of women, right? Usually it's, let's see, I'm sure you can agree with this. Most of your clients have multiple. So yeah, a lot of my clients do. I do work with a lot of single men. And the thing about the single men that I work with is they're setting things up to be good in the future, right? I hear a lot of, especially black men, I ain't got no wife and kids, I don't need no life insurance. Well, yes, you do. Here's the idea: lock in the price while it's cheap and you don't have responsibilities. Because once you have that kid, to Hannibal's point, you need to be setting up stuff for that kid. So the money you making now, you can't really spend it on $500, $600, $1,000, $2,000 a month on life insurance, because that's not in your budget anymore. If it was in your budget 5 years before you met the jiggly jiggly who became your wife, who then became the children of your mother, or the mother of your children, now you've got things set up. So God forbid something happens. Hey, you know what? I know you're my wife. I know you wasn't preparing for this, but guess what? I was preparing for this. Because shout out to my man Rael. He said something. As a man, see, a woman can look through the crack of the door and assess the situation, but she's only assessing that small bit of what she sees. As a man, you have to push the door all the way open and look into the entire room and pervade the entire room and make an assessment of what the entirety of the room looks like. And part of that is having your finances together, right? Now, am I saying you have to be absolutely perfect? No, because nobody is. Nobody will ever be absolutely perfect. But yes, the man does have to have discipline and vision, right? Let's see here. So he says, it's not an accident. Many of my clients are not accidental, right? But ironically enough, one of my clients has the same accountant as 50 Cent. I have some clients who are in the entertainment industry. And just like an average person, they make some willy-nilly decisions. The only difference is they have bigger checks. But they make the same asinine decisions. Let's look at Chadwick Boseman, the Black Panther. He died intestate, meaning without a will. So because of that, he wasn't really looking out for his family. You know why? Because his assets had to get dissolved. And the state had to decide who got what. So the state decided that his mother will get $1.1 million worth of his assets. The state decided that his wife will get $1.1 million worth of his assets. And because the state had to decide who got what and how much, they charged his estate $1.5 million. So the state of California got $1.5 million, while his wife and mama only got $1.1 million each. That's an additional $750,000 split between the two of them that they could have gotten. Go ahead, Hannibal.
And that's what I'm saying. Like, it should have clicked in somebody's mind that's in that family. Hey, he's making multiple movies. They're at the theaters. They're on streaming services. He's making some money. Let's set up an estate. But why that didn't happen, and I guarantee you, the family was caught up in the lifestyle.
Oh yeah.
That's why that did not happen, because they didn't care about him. They didn't care about nobody but themselves and the lifestyle that he was providing. It makes no sense that This man product is everywhere in the United States, across the globe, and y'all never said, let's set up in an estate. So just in case something happens, we gonna be taken care of. Cause listen, even if y'all don't give a damn about them, that's still a smart thing because it's still going to continue you all's lifestyle.
Mm-hmm.
People are stupid and when you selfish, you're dumb. There's nothing intelligent about you. There's really nothing intelligent about you. This what selfishness brings. So now they gonna have to still suffer because they just too busy being selfish.
Absolutely. What does the DLM say here? It does start with the man. The younger black men are getting it together with the amount of information you have access to at your fingertips. They are, and I'm appreciative of it. And I think, I'd like to think I have a little bit of impact in that with conversations like this, right? Just giving the information, right? Because, again, anecdotal, but in 1996, my uncle died of AIDS. He was he had a dance troupe called the Paul Hall Contemporary Dance Theater. They were second in the country to Alvin Ailey. Everybody knows who Alvin Ailey Dance Theater is. Everybody knows who Dallas Black Dance Theater is, at least if you're into dance like that. Nobody knows who Paul Hall Contemporary Dance Theater is. Okay? This man was being flown around the world on the customer's dime to dance for them. Here it is 30 years later. I can't even Google him and find anything of substance. I can find maybe a person from here in Westport, Connecticut who appreciated him because he's a local person. But even the people in the local dance scene don't know who he is. Right? But when he passed away, you know what he did? It was me, my cousin Jennifer, and my cousin Jason. I don't know why he happened to only have $3 in his pocket, but that's what he had on his deathbed. And he wrote, Dance in Heaven, I Love You, Uncle Paul. And then he wrote the date and time, and the very next day he died. And he gave that to me and my two cousins, each $1. Right? Now, people were like, oh, well, that message is so more valuable. I spent that dollar with the quickness. Unfortunately, it wasn't sentimental to me. I needed, like you said, Hannibal, that lifestyle, right? But had he had life insurance, it actually could have provided. I could have held that dollar and held on to it like my cousin Jennifer did. Right now, we were also different age. I was like 12 years old at the time, but the sentimental value of that dollar would have went a whole lot further had he left a lot more dollars, because my grandmother wanted to do things like open a not-for-profit museum for him. What money was she going to do that with? And GoFundMe didn't exist in the 90s. How did we pay for that funeral? Right? When he died, all his stuff, we fought over it. Oh, that's his costumes from when he did this show. That's his set pieces from when he did that show. Well, because he died without a will and not enough money for the state to care, we just got stuff as we saw fit. Let's see. That's crazy. He didn't have a will set up being sick like that. So a will is something that's ever changing, right? You don't want to just do a will and call it set and forget, right? And that is the fault of a lot of insurance agents. So I'm not going to lay the fault solely with the general public, because you have to make a living, right? You're not an expert in these different things. I am. That's why that's my job. But part of my job is to say, hey, I gave you a life insurance policy, but that's not the end of the job. Now I need to make sure that you sit with an estate planning attorney and you set up a will and a final testament, or you set up a trust. And the easiest way to fund a trust fund is through life insurance. I'm going to show you all that through this. We're gonna go through a different screen here really quick. right?
I'm gonna drop off. I appreciate it. I'm still listening though. I'm about to drop
No
off.
doubt.
Yep.
Rockefeller Trust, right? So let's look at the Rockefeller Trust. The Rockefeller Trust method is a wealth management strategy that uses trusts, life insurance, and investments to preserve wealth and provide for future generations. The Rockefellers use this method to create a long-lasting financial legacy. So how it works. Trust. The Rockefellers use irrevocable trust to protect assets from taxes, creditors, and family disputes. Trust can also be used to ensure that wealth is distributed according to the creator's wishes. And here's how they do it. Life insurance. The Rockefellers use life insurance policies to create a self-perpetuating wealth cycle. The cash value from these policies can be used for education, home purchases, or retirement. So what happens is they go ahead and they sit there and they get a life insurance policy and they put it in the trust. And everybody gets a life insurance policy and they put it in the Rockefeller Family Trust. It's building cash value. So now instead of going to the bank, they come to Uncle Ricky Rockefeller and say, hey, Uncle Ricky Rockefeller, I need to borrow $200,000. Okay. He gives it to him. They flip it. They get their profit. They put it back into the cash value of the policies, and they buy another life insurance policy that goes into the family trust. So everybody that dies is contributing to the family getting richer. Because has anybody ever experienced anybody making it out of life alive? I haven't. All I've ever seen is when people die, that's it. You should get life insurance on your children. But with the trust, again, the trust is ever changing. So you want to make sure that you're able to evolve it. Right? Let's see. The Rockefeller waterfall method. Let's see what this is. What is the waterfall method? Right? This is from a CPA and real estate investors. So they don't even sell insurance. But you got a bunch of people online who keep telling you about this nonsense. And they don't tell you about the most important one, which is life insurance. Right here, Senator Ron Wyden. This is finance.senate.gov. Right? Senate Finance Committee Chairman Ron Wyden released the results of an 18-month investigation into the use of private placement life insurance as a buy, borrow, die tax shelter for the ultra-wealthy. The investigation, the first of its kind, into the PPLI industry, found that it's a tax shelter made up of $40 billion in policies. There are 3,000 people in America who have one of these. But let's continue. So Thomas Caselli, CPA, real estate investor. So after years of being a tax strategist for real estate investors, I stumbled upon all types of tax efficient strategies, including using whole life insurance to build and maintain wealth. Yes, this includes the infinite banking concept. However, due to the significant capital and long-term commitment to many whole life strategies, I remained skeptical and didn't quite see where it fit for your average investor, which is what a lot of CPAs and real estate investors do. But here's the problem. Significant capital and long-term commitment. What do you think it takes to get into real estate? You think it takes $5 in 15 minutes? It takes fucking years and tens of thousands, if not hundreds of thousands of dollars. Right? So let's continue. He says, I was skeptical. He says, most would be better off funding investments over life insurance to build wealth, which is untrue because most can't fund investments. If you come to these investment people with less than $25,000, they're generally not going to do anything. And $25,000 with a 1% fee is $250 of a check. You think they're going to waste their time dealing with you? I think not. While I still haven't pinpointed exactly when it exactly makes sense to pull the trigger on this, I've recently started warming up on the idea after learning about a concept that we'll discuss in this blog. In today's post, we're diving deep into the Rockefeller waterfall method, an intriguing approach to building and sustaining generational wealth using whole life insurance. This method not only exemplifies a savvy financial strategy, but also highlights a stark contrast between two of America's wealthiest families, the Rockefellers and the Vanderbilts. And trust me, all the wealthy families use this. So what is the waterfall method? And again, this is the financial impact of who you are laying with. He says, was there a new tax code passed by the IRS to tax trespasses? No. So what you're talking about is the estate tax, and I believe that is 13.6 million per person, 26 million per family. Most Americans ain't gonna get there. He says, my younger brother passed at 23, and luckily my mother had life insurance to pay for his funeral expense and after. My condolences. I know the Black community was dying when I started to see more funerals and weddings. Yeah, it's terrible. He says, I remember briefly reading about it. I'm not sure. You can use infinite banking to position your stock portfolio and assets for borrowing if the rate is worth it. So I'm going to show you guys some stuff. Hold on. Let me see something. Text me. Let's see. There's one of my back offices here. It's October 24. Let's look at January 25. Okay, so these are rates for index universal life insurance. I'm going to get back to that, but I want to show you guys some things on that. Because the rates, life is a decent thing. Dime is another one. It says, I work at Ameriprise, so I'm always trying to learn methods of creating income or wealth. So I'm going to show you something, right? So let's look at the index rates, right? So first I'm going to show you New York, right? Because there's a law called AG 49, right? So on index universal life insurance policies, the max illustration rate, or what we legally can show you what your cap rate is currently 5%. However, what you're actually realizing in the S&P 500 one-year point-to-point is 7.5%. So we're under-promising and we're over-delivering, right? You look at the 2-year point-to-point, the most we can illustrate is 5%. But what you're currently getting is 16.5%. And these were effective as of February 1, 2025. So these are current rates. If you want to go to the Morgan Stanley International, the highest we can illustrate is 4.47%. What you're actually going to receive is 8.88%. Go to the Russell 2000 one-year point-to-point. The most we can illustrate is 5%. But what you're actually receiving is 9.35%. Now here's the difference here. In the 500 one-year point-to-point monthly sum, you're only getting 2.5%. The most we can illustrate is 4%. So it definitely begs to the knowledge of the advisors, right? Let me just see here. Okay, no new comments. Two Triv, what's going on, bro? So the waterfall method revolves around the strategic use, and I'm not a fan of whole life insurance. I'm a fan of index universal life insurance. We'll go there shortly. But look at Ameriprise, right? If you guys charge a 1% fee, you're not looking for anybody with, to be honest, less than 500,000 investable assets. And I don't know, you guys probably go off a GDC, gross domestic concession, right? I don't hold my securities license, but I'm very familiar with the securities world. I used to be a stockbroker. I was with some of the largest carriers: Prudential, New York Life, Guardian, Securian. So the waterfall method revolves around the strategic use of whole life insurance policies to create a self-perpetuating wealth cycle. Here's how it typically unfolds. 1. Whole life insurance basics. This type of insurance guarantees coverage for the insured's entire life, provided premiums are paid. It includes a cash value component which grows over time and can be borrowed against. Notice they said borrowed against. What do they tell us in the Black community? Borrow from. There's a difference between borrowing from and borrowing against. 2. Building cash value. Premiums paid into the policy contribute to both the death benefit and the policy's cash value. This cash value can be accessed through loans or borrowing from the policy, used for various personal or investment purposes, effectively serving as a personal bank. So when you borrow from your cash value life insurance, because a lot of people will be like, what about the opportunity cost? If your whole life or your infinite banking concept policy is properly structured, you're not going to have an opportunity cost, because in year one, you're going to have cash value, generally up to 80% of your cash value. So if you pay $35,000 a year into the life insurance policy, year one, you're likely going to have about $30,000 of that access to about 30,000 of that 35,000. Right? So then you can borrow from that, and then you can go invest in something speculative. But unfortunately, money managers at a lot of these big firms, they don't want you putting your money somewhere else where it's guaranteed. They want all your money assets under management, or AUA, assets under administration. 3, utilizing the cash value. Policyholders can borrow against the cash value for needs such as home purchases, education funding, or retirement planning, often at a favorable interest rate compared to a traditional loan. Repaying loans. These loans can be repaid flexibly, allowing the policyholder to manage their financial flow without impacting other investments or savings. Generational wealth transfer. Upon the death of the policyholder, the death benefit, minus any with outstanding loans, is passed to the beneficiaries, ensuring a financial legacy. So this method not only preserves wealth within a family, but also amplifies it over generations through strategic reinvestment and careful financial management. So how it helps to build and maintain generational wealth. The waterfall method excels in its ability to perpetuate wealth through multiple generations. It employs life insurance not just as a safety net, but as a proactive financial tool. So life insurance is for the living. It's life event insurance. If we sold life insurance the way that it needs to be sold, or the way that it should be sold, you wouldn't have Ameriprise. You wouldn't have TD or Charles Schwab. You wouldn't have Ariel Investments. You wouldn't have Harlem Capital. You wouldn't have JP Morgan Wealth Management. Watch this. All right. Trust and Estates from JP Morgan. Right? So this is from, no, this isn't the article that I wanted. Is the who should own a life insurance policy? No. Oh my gosh. Who should own a life insurance policies? Insurance proceeds are not taxable as income. However, if you own a policy on your own life, your estate may have to pay taxes on the proceeds, even if you leave the proceeds to your spouse, in which case there would be no estate tax because your estate would be entitled to the marital deduction. If your spouse has a taxable estate when he or she dies, the excess over the exemption will be subject to tax. Creating an ILIT, or an irrevocable life insurance trust, which is what the waterfall method is, to own the policy and to be named as a beneficiary can significantly increase the likelihood that all of the life insurance proceeds will be available to your family when you die, and that none of it will be subject to estate tax. Okay? And this is JP Morgan Wealth Management. Right? I want to see let me do like this. Life insurance as an asset. How to use life insurance as a financial asset. And this is from jpmorganwealthmanagement.com. Right? Or jpmorgan.com. Yes, life insurance can offer a benefit to loved ones when you pass, but it can also be a financial asset during your life. Let's learn how it works. Right? So some life insurance policies can become a financial asset for you to use during your life, just like an IRA or a mutual fund. Why would I waste money in an IRA or a Roth IRA or a backdoor Roth when I can just get a rich man's Roth? All right. So let's take a look. So permanent life insurance policies enable you to invest in a conservative investment like mutual funds or ETFs. You can choose how you want to diversify your investments, allowing you to curate your policy to meet your risk tolerance and goals. Because of this, permanent life insurance can serve as a hedge against market risk. Check the comments here. Okay. So there are two main types of permanent life insurance that can be used as an asset: whole life insurance and universal life insurance. Right? Whole life insurance is the most common type of permanent life insurance, which, in addition to a death benefit, offers the policyholder the ability to accumulate cash value. Also, whole life insurance pays dividends. Some whole life insurance pays dividends. Right? So, this works because a portion of the premium you'll pay every month gets put into a cash value account. Think of it as an insurance policy with a savings account like component. Your cash value will accumulate over time with a minimum guaranteed rate indicated by your policy. Just make sure you read the fine print of your policy to understand what that is. Also noteworthy, the premiums of these policies typically won't increase during the life of the policy. Then you have universal life policies. Universal life functions similarly to the whole life. They allow policyholders to grow an asset by accruing interest over time that can be borrowed against. Keep in mind that with universal life policies, the premiums aren't set, which means they are subject to change, and there is also no guarantees on the rate your money will earn over time. Under the universal life umbrella, something called variable universal life, which I don't like, which enables their policyholders to invest their earnings into the accounts of their choosing, including mutual funds, so you have the potential to earn more over time. I dislike variable universal life insurance. I dislike traditional universal life insurance. I like indexed universal life insurance because it doesn't leave your premiums up to the market risk. So how to use your life insurance as an asset. So there's several ways that you can use it as an asset. As you contribute to your policy over the years, you earn the ability to borrow against what you've saved. Also, all your earnings are growing on a tax-deferred basis. So here's a look at some of the ways to maximize your assets potential. Take a loan from your policy. You can borrow against the cash value of your permanent life insurance policy. Just read the fine print before you go this route. The interest rate can be fixed or variable and is set by the insurer. Also, if you take a loan against your policy and it's not paid off at the time of your debt, any outstanding balance that you owe gets subtracted from what your beneficiaries inherit. So that is, again, the buy, borrow, die strategy, right? Where you say, hey, listen, I have several life insurance policies, and I take this here life insurance. Hold on one second, guys. I'll be right back. All right, I'm back. So yeah, let's say you with the buy, borrow, die strategy, you take a life insurance policy. Let's say you get $1 million death benefit, and let's just say this one life insurance policy, because the wealthy insure one life at least 7 times, right? So to Hannibal's point, especially in the Black community, I speak to a lot of people who are like, "Oh, I have one single life insurance policy," and call that a day. I'm going to divulge a lot of stuff on today's live before I close out. But with that policy, let's say it's $1 million death benefit. Let's say you build up $200,000 of cash value on over time, over 20 years. And then you want to borrow $100,000. So you borrow $100,000 and put a down payment on a fat, nice house. You don't have to pay it back at all. Unlike a 401k loan, where if you don't pay it back within 5 years, and the maximum you can take out is $50,000, and it has to be for a residential home, generally a first-time home purchase. But your realtor doesn't know shit about life insurance, nor does your mortgage loan originator, so they don't want to go to life insurance. They let their wealthy clients do that. And you go ahead and you get this policy, you borrow that $100,000, and then you get the house, and then you pass away. Get hit by a bus, boom, you're gone. Well, your family is not going to get $1 million. They're going to get $900,000 because you didn't pay back the loan. But you already collateralized the loan by purchasing the death benefit. So life insurance is a really, really wicked tool when you look at it. So you can use your policy. You can take a loan against your policy, right? But you can also use your policy as collateral for a loan. So let's say instead of borrowing from my 401k or borrowing from my life insurance to get a house, I borrow against my life insurance. So in some situations, you can use your life insurance policy as collateral for a loan, which can make it easier for you to get approved, perhaps get you a better rate on the loan that you're taking out. Essentially, your life insurance policy is serving as an asset to prove your trustworthiness as a borrower. But keep in mind that if you die before paying it back, whatever you still owe would come off the top before your beneficiaries get their death benefit. So same scenario. Let's say I want to go buy a new Benz. I take out a collateral assignment instead of going with MB Financial, which is Mercedes-Benz Financial. I say, listen, I want you to collateralize this $1 million asset against this. I'll go cheap, $170,000 E400, right? Well, maybe that's a S class. I think the S class is 170. I think the E class is like 110 to 140,000. But that's kitted out. That's probably going to be an AMG. That's not just off the lot. But keep in mind, if you die before it, you got to pay that back. So that Benz, I borrowed, and I assign 125,000. No, you don't have to have that money in the insurance policy. You do have to have some money in the insurance policy, but you don't have to have that whole 125,000 in the insurance policy. To borrow from it, yes, but not to borrow against it. So what we're looking to do, Hannibal, is to borrow against the policy, not from it. Okay? So when you're borrowing against the policy, there are certain parameters that you have to meet. Policy has to be enforced for a certain amount of time, have a certain amount of cash value. But you assign $125,000 over to Mercedes-Benz Financial. MB Financial you're still gonna have to qualify for the loan the regular way, but you're likely gonna get better rates because now they see this asset that you've been paying for a couple of years. So it's not like you're gonna turn around and throw away the money that the cash value that you have in that policy. And you could double dip. You could take money from the cash value of the policy, borrow that, and then still use the face amount of the policy. Say, hey, listen, I'm gonna put $20,000 down, plus I want you to use this life policy as collateral. So if I die before you guys get your money for this car, you know that you're going to get your money for this car because you're assigned to it. And because you're assigned to it, if I default, you ain't got to worry about sending the repo man. Just cancel the life policy and take all the money out of the policy, whatever money is there. If you happen to have 125,000 cash value in the policy, then it's a wash. If you don't, yeah, they'll still repo it. But yeah, you don't have to have that much cash value in the policy to do so. Driving to wealth, what's going on? So the other way, so it has to be a permanent policy, either whole life, universal life, index universal life, or variable universal life. You cannot borrow against term life insurance. Okay. So the other thing you can do is withdraw funds. So rather than taking out a loan that must be paid back, you can also simply make withdrawals from your policy that are yours to keep. Just note, if your withdrawal is an amount great enough to dip into your investment gains, you'll need to pay taxes. And like a loan, the amount you withdraw is money that you won't be paid to your beneficiaries later because your withdrawal decreases the value of the policy. Okay? So, again, black folk, this is all shit you could do. Right? Everybody want to be chasing after, oh, I'm going to chase after real estate. You know how few people actually make money in real estate? Do the BRRR method. You're just miring yourself in debt. And then there's nothing to pay it back. So when you die, your family loses the property. Right? You have an option for an accelerated death benefit. This is if you get, chronic, critical, or major illnesses. I wouldn't go ahead and do that. 10% what, DTW? I gotta get you a wrench. Your other option is to surrender the policy. This is when you're cashing out, right? So, let me see if I can pull up my. Let me stop the screen for a second because I gotta not put customer info out there like that. Let's see. I'm going to show you guys an IUL. I just got to cover the client's name. And we're going to look at the numbers. Right? And this one was not set up for infinite banking. This one was set up for a collateral assignment. Okay. The client is 44 at the time of the policy. Okay, here we go. Let me 10% real estate agents make it. Yeah, it's not a lot. But that's not even real estate agents. I'm talking about people who aren't real estate agents who think I'm going to get into fix and flip. You don't need your real estate license to get into real estate. You don't. You absolutely don't. But there's things about that matter, right? But I'm not going to get to. I used to have my real estate license as well. I'm not going to get too deep into that though. But I want to share this with you guys, right? Because again, this is all about the financial impact of who you're mating and dating. So this is a real client of mine, right? I'm making the screen extremely big because I don't want you guys to see his name. So his annual premium is $48,000. Okay. So initially the death benefit was $2.4 million. But after 10 years, he's put $480,000 in. He's got $2.7 million death benefit. Now, his cash value is not that high because this policy was not created for building cash value. It was created for building a number that he can borrow against. So should he decide, I want to buy a house, I have in 10 years, he has $2.7 million to use as collateral. The bank is fine because they see he's got $350,000 in cash right there. He's been paying $48,000 for the last 10 years. So he got, like I said, with $346,000 of cash. Okay. What's going on, Wellness with Frugal Mama? But he can now use that as leverage. Right? So this is a person from New York City. So a $2 million property is not uncommon. So, okay, I want this $2 million property, or let's just say $1 million property. So he goes and he says, listen, I have a $2.7 million asset I want to use as collateral. Oh, well, you know what? We're not going to give you a 6% interest rate or a 3%. We're going to give you a 1% interest rate. Why? Because he has this asset right here. So they know if once he signs the paperwork and then the next day gets hit by a bus, they're guaranteed to get their $1 million back. They also know he got $350,000 right here. So if he goes into default, the likelihood is he's still going to be paying this policy. So let's say he's paying this policy, and over the course of 10 years, he's paid $960,000 into the policy. He's got $986,000 worth of liquidity. But mind you, he's also paying the mortgage. So as he's going, this money that he has is going up, but the money he owes the mortgage is going down. Underrated. What's going on, brother? Right? So it's a double strategy. At one point, he can say, you know what? I don't want to pay Chase Bank any interest anymore. I owe $750,000. Let's see. Let's just say year 15, the year that year 17, the year that he's still paying the policy, and I have him paying it for a smaller amount of time. I don't think anybody should pay for life insurance for their whole life. So we had him paying for this for 21 years, from 44 to 65. Right? So let's say year 17, right? So he got the mortgage. Let's say he got the mortgage year 10, right? Or year 10, when he had $346,000 in his life insurance policy, and he got a 30-year mortgage. But over time, he paid it down, and he paid $250,000 over the course of 1, 2, 3, 4, 5, 6, 7 years. And now he only owes $750,000 on this $1 million loan. Well, he's got $777,213 of cash value. So he calls me up and says, I want to borrow $750,000, or maybe a little more because of taxes to pay off my mortgage. Okay. So we're going to give him $752,000, bringing this down, right? But there's something called arbitrage. So even though he borrowed $750,000 from this cash value, he's still going to gain interest or earn interest on the $750,000 or $777,000. Unlike if he borrowed it from a brokerage account. Let's see. He says, what people typically do is buy real estate from banks. Yeah. So now he turns around and pays that off, eliminating anything that he has to deal with Chase Bank. He doesn't have to deal with Chase Bank at all. But now he's got the task of paying back to his life insurance policy just to get this cash value to grow again, to be actually what it is, because he's still going to earn interest off of $777,213. But that amount won't be there because he took $750,000 away. But he's still earning interest as if it didn't go away. So as time goes on and he gets older, hey, listen, right here, the most he paid was $1,008,000 into the policy, right? But as we look here, year 21, he's already come up $50,000. Let alone the fact that his death benefit is $3.4 million. If you notice, when we started, the death benefit, let me just increase that so you guys can't see the name. When we started, the death benefit was $2.42 million. Year one, he put in 30 grand. The death benefit is $2.458 million. As we continue, the death benefit just keeps growing as he's putting cash into it. So at age 61, at age 65, year 21, he stops paying into the policy. And again, what the major thing that you have when you're investing is time. And life insurance is by no means an investment. Is it an alternative? Yes. Right? And then the peak of his cash value is here, where he's got $1.179 million. That's where it's time to cash out. Right? You cash out, hey, listen, I want to cancel the policy. I want to take all the money. Well, he only paid $1,008,000, but he came up $171,180. Right? Was it over the course of 20 years? Yeah. But if you go to Google and ask what's the typical time horizon for an investment, let's go to Google and do that. Hold on. Because I'm going to step on the toes of some investment advisors right now. Right? What is the average time horizon when investing? So the average investment time horizon is typically considered to be around 5 to 10 years. No, it's generally 20 years. Falling under the category of medium-term investing, where investors can balance some risk with potential for growth by holding investments for a moderate period of time. And then someone to say how between 3 and 10 years, right? So that's midterm investing. Long-term investing is 20 years. How long in years will it take a $300 investment to be worth $800 if continuously compounded at 12% per year? Well, that wouldn't happen, but it says it would take approximately 8.5 years. Right? This is assuming dividends reinvested, so on and so forth, which generally doesn't happen. Where am I here? Okay, so even if we go at the 10-year, because let's see what is the average rate of return. We're going to say over 10 years and over 20 years. So it says, according to recent data, the average rate of return when investing in the stock market over a 10-year period is around 11%, right? Because the S&P 500 historically does 10.3%, but you're not getting that year over year. That's a culmination of the 10 years. So basically, you're getting 1.1% a year, right? A lot of these investment advisors make it sound good. Oh, yeah, you're going to get 10% over the course of a time horizon, which if you're doing midterm investment is about 11%. So that's 1% per year. It's not as sexy anymore, huh? Average stock market return, about 10%. So over the course of 20 years, it goes lower. It's about 0.5% per year. So all this investing nonsense is bullshit. Now, if we look at the fact that he put in $1.1 million, right, over the course of that 20 years, and got back 179,000, he basically did the same thing without the ups and downs and protected his money. Right? So over the course, and remember, that's the illustrated value, right? Remember, I showed you, and this is in the state of New York. The illustrated value that he was getting is 4.82%, right? So that's what at the time it was legal for us to illustrate maximum. What he's actually getting currently is 7.5%. Prior to that, it was the same, 7.5%. So the current that we can maximum illustrate is 5%, but you're getting 2.5% higher than what we're showing you. Right? Let's look at outside of New York because it's even more aggressive. Outside of the state of New York, the maximum we can illustrate is 5.9%, but what you're getting is 9.2%. Right? They don't have the sector rotator outside of New York. Well, I'm sorry, they do, but there's no cap rate. So because there's no cap, we're at 190% par rate. You got the Mark V, 199% par rate. The PMB multi-asset index 5, 210% participation rate. And then the Barclays Momentum, 273% participation rate. So this guy is using this policy to be able to buy a property in New York City. So if he's, let's say, again, he had the policy for 10 years. He can go to Chase Bank and say, hey, I need to borrow $1 million. I have a $2.7 million asset to collateralize against. What do you have? I have this life insurance policy I've been paying into for 10 years. I have $350,000 of liquid cash. So technically, you guys aren't even on the hook for the whole $1 million. You're on the hook for $650,000. I'm going to continue paying my life insurance policy. Let's say by year 20, right? I owe $750,000 left on the $1 million mortgage. Well, I got almost $1 million here in my life insurance policy. I'll just borrow from it. Boom, pay that off. And then what I was paying to Chase per month, I'll just pay back in my life insurance policy, speeding up the cash value growth. Right? So that's some of what JP Morgan was saying. And again, this goes to the impact of who you're dating. Because who you're dating matters, because who you're dating is going to be, I'll give you an example. I have a relative who sat down with me and was like, yo, I want to buy some life insurance, da 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 da. We got him some life insurance. He said, hey, can I do the same thing for my wife? Right? And this is going to go back to those differing opinions on things like life insurance or not life insurance, but financial differences. So he goes to his wife and he says, this is mind blowing to me. Bro, it's crazy because a lot of people are unaware of this, right? A lot of people have their investment license, their Series 7 and 66 to do assets under management. They don't know dick about life insurance. There's some people who have their life insurance license. They don't know dick about life insurance. Right? This is why I call myself the all-star advisor. You had 3 people who came from minors to the pros, right? You had Smush Parker, Lamar Odom, and Kobe Bryant. Nobody thinks about Smush Parker unless they think about the people who failed. That's what most people who are in life insurance are. They're Smush Parker. They were able to get their license, but they don't know shit. Then you got some people who are Lamar Odom. Hey, they're good. They kind of know what they're doing, but they don't study their craft enough. Then you've got me, which is like Kobe Bryant. I'm fucking obsessed. So I want to know the ins and outs, the ups, the downs, the lefts, the rights. So again, so my relative says, hey, listen, I want to put a policy on my wife. So I'm collecting the information and he's like, I need you to get her social, this, that, and the third. He's like, oh, so he asked her for her social. Why you need that? I'm getting a life insurance policy on you. She goes, I'm not sick. Why do I need life insurance? You know what? I'm not going to write this policy. She's not going to consent to it. I'm sorry. You don't need life insurance when you're sick. You need life insurance when you're alive and wealthy and healthy. Again, that goes back to this Rockefeller method. right? So the waterfall method excels to do wealth preservation. The cash value and death benefit act as a reservoir that can support the family in times of need or opportunity. Tax advantage. Growth within the policy and payouts are often tax advantaged, providing a more efficient way to manage and transfer wealth. Family banking concept. By borrowing and repaying the cash value, families can finance their own ventures and needs internally, reducing reliance on external banks and creditors. Estate planning. Integrating these policies into estate plans can streamline wealth transfer, avoiding probate, and reducing estate taxes. Incorporating trusts into the waterfall method. And I'm going to put this in the chat too, just so you guys know, because this is from a freaking CPA and a real estate investor. And I'm leery on that. I don't know if I want to trust life insurance. Well, the Rockefellers and many other families, I'm gonna beat y'all in the head with one. Right? We know about JP Morgan. No, not life insurance. I just want JP Morgan. Right? No. Who is JP Morgan? So who is JP Morgan? So John Pierpont Morgan was a prominent American financier and industrialist. He was a leader in the Industrial Revolution. And obviously we know he was born here in Hartford, Connecticut. He was educated in Boston, Switzerland, and Germany. He worked as an accountant in New York in 1857. He became the agent for his father's bank in New York in 1861. Right? He co-founded Drexel Morgan and Company. Right? And then he became, he led the firm which now became JP Morgan. Now, watch this. You guys have heard of Henry Sturgis Morgan. Right? So who is Henry Sturgis Morgan? Henry Sturgis Morgan was an English-born American banker, known for being the co-founder of Morgan Stanley. Right? Now, watch this. Are J.P. Morgan and Henry Sturgis related? Yes, Henry Sturgis Morgan was the grandson of J.P. Morgan. So when, as black men, we talk this bullshit about nepotism and we're crunching on LeBron James for getting his son signed to the Lakers, meanwhile, Henry Sturgis Morgan is the grandson of J.P. Morgan, who is the son of another Morgan who was a rich banker. You don't think they're using the Rockefeller or the waterfall method? You think they're just doing investments? The wealthy don't go into the stock market for accretion of capital. They go into the stock market for preservation of capital. So let's continue here. So, incorporating trusts into the waterfall method. Trust formation and management. The trusts hold the life insurance policies. So that's why when I say you want to start a trust fund, the operative word is fund. And the easiest way to fund a trust fund is through life insurance. Trusts hold the life insurance policies, allowing the grantor to control how the proceeds are used by future generations, ensuring that the wealth is managed according to their wishes. Generational wealth also comes with generational rules and generational knowledge. I know a guy who is a third-generation life insurance producer. This man wrote $4 billion in premium. At 50% commission, that means he made $2 billion selling life insurance. His family has a trust that every child that turns 16 gets $3,000 a month for life from their family trust. It's funded with life insurance, nothing other than life insurance. So you mean to tell me, and this is an Indian man, he has a fairly sizable family. Every person on their 16th birthday gets a check for $3,000 a month until the day they die from the family trust. Now, part of the rules of that are there are rules in the trust. One, you have to have a life insurance policy that you put back into the family trust. You have to spend family time with the family. Black Americans, you just better not disrespect mama. You better do as I say and not as I do. Advantages of trust. Trust bypass probate, reduce estate taxes, protect assets from creditors, and allow the grantor to impose specific conditions on the distribution of assets, fostering responsible wealth management across generations. So let's look at the example of the Rockefellers versus the Vanderbilts. The effectiveness of the waterfall method becomes stark when examining the financial legacies of the Rockefellers versus the Vanderbilts. And the Vanderbilts ain't no slouches. Your man Anderson Cooper still got money. And he's the son of Gloria Vanderbilt. The Rockefellers employed a systematic approach to wealth management and succession planning, using trusts and whole life insurance to ensure wealth was not only preserved, but also grown across generations. This strategic foresight has allowed them to remain influential and wealthy even today. The Vanderbilts. While immensely wealthy at one time, the Vanderbilts lacked a sustainable plan for wealth preservation and succession. Their wealth was significantly diluted over generations due to extravagant spending and lack of reinvestment into sustainable wealth building strategies. So, in conclusion, the Rockefeller waterfall method offers a robust blueprint for those aiming to not just accumulate wealth, but to ensure its longevity and relevance across generations. By learning from the contrasting outcomes of the Rockefellers and the Vanderbilts, modern families can adopt similar strategies, ensuring their wealth is a legacy rather than a memory. Adopting such a method might seem daunting, but with the right guidance and strategic planning, a family can start on a path towards sustainable generational wealth. It's not just about being wealthy, it's about being wisely wealthy. And again, this is from a CPA. This ain't from me, a person who sells life insurance. I'm assuming this person don't sell life insurance. Real estate accounting and tax solutions, or become a smart tax insider. So yeah, he doesn't sell life insurance. He's a real estate investor, but I bet you this, he's using that collateral assignment. Who's Hall CPA? Yeah, so you can work with Hall CPA, no relation, that just happens to be his name, right? Thomas Castelli, CPA real estate investor. Doesn't sell infinite banking plus the eyelid, the ultimate strategy for building generational wealth. Right? So there's got to be something to this life insurance stuff. Right? There's got to be. Let's sign up for his free newsletter. Accept. Okay. So again, you can see how that can actually have a huge impact, right, on your life, your livelihood, your memory, right? You're not going to have people who are going to disrespect the fuck out of you like I'm going to do to my grandfather. Right? My grandfather, unfortunately, I'm the last male of his last name. Right? He didn't do nothing for me except birth my parent, my mother. Right? But now he's, oh, I want to leave you this land. Well, this land ain't going to do nothing. Especially if you leave me this land with no instructions on how to till it and no money on how to pay property taxes. So I'm just stuck like Chuck. Is that enjoyable? Nah. I don't want to be stuck like Chuck. I'd like to be in a position where I can do something. Right? And unfortunately, this is the situation. And that's why this is entitled The Financial Impact. Right? I started with the young lady in Detroit because, as we know in the black community, a lot of black men, well, oh, the jiggly jiggly, it's easy pie. It's easy panty pie. And then the woman is a receiver. So she might be like, oh, maybe I'll change him when he has this baby. He'll go ahead and be responsible. Like Hannibal said, the moment you find out, oh, shorty pregnant, you need to be putting money in a bank account so that you can give that to that child. You want your kid. How many black dudes do I know? I'll do anything for my kids. I'll put a nigga under for my kids. I'll do anything for my kids. Get some life insurance. Humming. I don't believe in that. Well, then you ain't gonna do anything for your kids. Shut the fuck up and get out of my face. Right? But see, then if I say something like that, the fragile black male ego will want to fight me. And I have to put somebody to sleep. Right? Am I perfect? No. Guess what? I don't have life insurance. You know why I don't have life insurance? Because I'm uninsurable. Since the age of 27, I've been trying to get life insurance. Right? And they've been like, sir, looking at your health, we're not willing to take the risk on you. Decline. This is why it's also important to get a permanent life insurance policy when you're younger. Life insurance is not paid for with money. It's paid for with age and health. Every year I apply for life insurance. And every year they say, you could sell it, but we're not going to insure you. I can't get a life insurance policy to do the Rockefeller method. Do you think I would have one if I could? Hell yes. I'd put $2,000, $3,000, $4,000, $5,000 a month away into a life insurance policy. Number one, I'd be getting paid off of it because I'd write my own policy. But number two, I'd be able to use these policies for all these strategies. But because of my health and being a bliggity black, drinking 40 ounces and smoking weed when I was young, not doing anything responsible, trying to run the streets, getting shot 5 times, and having diabetes before the age of 50 because, I got to have my 40 ounces and my Grey Goose with the homies in the hood doing damage to my body. I caused myself to have diabetes and high blood pressure, which a lot of black men have. Virgil Abloh died at 41 from a heart attack. We busy out here trying to impress people who don't give a two shits about us. I put up a post on TikTok showing that black people are at the bottom in terms of household income. So many black folks are fighting. Oh, well, these people have, they have more than one person in the house. To Hannibal's point. Well, then create a fucking family instead of a broken family. Stop having babies' mamas. Now, yes, are there divorces? Everybody goes through divorce. So those types of broken families happen. But stop making babies' mamas. Nah, she ain't good enough. I got a relative. 3 children with this woman. The oldest is like 22, the next is 18, and then the next one is like 5. Nigga, what the fuck? Why didn't you marry her 18 years ago? But you got a nerve to go have another kid with her. I do not want to pay for the nuts you've busted. And she's on public assistance. Yeah, you're a business owner, but your business ain't doing what it's supposed to. So what sympathy would you like from me? Because you ain't showing me no sympathy, busting these nuts and expecting my tax dollars to pay for them. So why should I show you sympathy again? Oh, that's what I thought. The selfishness, the entitlement is ridiculous. Right? I had somebody again on the post where I showed that blacks have the least money. It says, well, How do we have the least money, but we spent the most money? Just because you spent the most money does not imply that you have the most money. It just implies that you spent the most money. And again, we don't practice in nepotism or cronyism. There's no reason that when Broke Genius has a business, I can't send my son to, and I'm not picking on you, Broke Genius. I just grabbed out a name. I can't send my son and say, hey, listen, my son don't want to do my business, but he's got interest in your business. Can we set him up with an internship? And yeah, I want you to crack the whip and ride him hard because it ain't no free rides, but let him know he got a free ride off of the fact that me and you are homies. So his daddy got him this job, but he's going to have to work harder than the next man because you're going to likely be able to move up fast. But I want Broke Genius to make sure that he don't screw up Broke Genius's company. So my son better get his ducks in a row and do what he needs to do to make sure that when he gets this position, he's doing what he needs to do. So I want you to start him at the bottom. I want him sweeping dirt off of the floor that's a mud floor. I want him to learn everything from the bottom up. Nepotism does count, but yes, I'm not just going to put you in as the CFO. No, you're going to get put in sweeping dirt. You're going to be pond scum. But what's going to happen is you're going to learn every aspect of the business, inside, out, up, down, left, right, A, B, select, start, contra code. Meanwhile, when Broke Genius hires them other people, he hires the guy to sweep dirt. All he better do is sweep dirt. He ain't gonna learn about sweeping dirt. He ain't gonna learn about accounts receivable. He ain't gonna learn about accounts payable. He ain't gonna learn about payroll. He ain't gonna learn about the taxes. He ain't gonna learn about shipping. He ain't gonna learn about receiving. He's not gonna learn about the other aspects of the business. Your job is to sweep the dirt. My son is sweeping dirt and learning the whole aspect of the business, nepotism and cronyism. This is what we need in the Black community from Black men. And then stop doing the same businesses. I grow tired of seeing your logo hot pressed onto a fucking Hanes t-shirt. That does not beget a clothing line unless you are sewing things. People like Dapper Dan, he actually had a clothing line, or could have had a clothing line, but he actually sold these and got the materials. And then sold the MCM and the Louis and the Gucci together. But your logo, Hustle Hard Economics, printed on the t-shirt that you bought from Alibaba, does not constitute a business. Why don't, okay, you got a wing spot? Cool. Well, work with a brother who sells the peanut oil, who distributes the peanut oil that you fry your wings in. Work with a brother who distributes the napkins and paper towels that you use. Work with a brother who distributes the mops that you use. Work with a brother who distributes the utensils that you use. Work with a brother who distributes the rubber gloves that you use. Work with a brother who distributes the refrigerator that you use. No, but we don't get into all those businesses. I feel you. And listen, I'm not diminishing the hustle, but we have to stop hustling and we have to start working. We actually have to work. Otherwise, we're not going to get anywhere. People were like, oh, well, the Indians are top in America because they have 5 people in a household. Well, guess what? When I was selling Aflac in New York City, I worked with a guy whose father was Pakistan's equivalent of Donald Trump. He was worth like 10 million American and like $1 billion rupees. Right? And he said, why do you Americans say that we're broke? Because all he drove was M series BMWs, which you got to have money to get an M series BMW or an AMG series Benz. Right? People look at me driving my Benz. Oh my God, those are the worst. No. E-Class Mercedes-Benz are considered taxi cabs through the rest of the world. They're very reliable car. Now, you would say, oh my God, if I had an E43 or an E63 AMG, a double digit Benz, because then that has a higher profile engine, a more powerful engine, and it's meant for speed. An E-Class is a fucking taxi. An E350, an E300, an E450, an E400, even an E550. It has an 8-cylinder engine, but it's still a taxi cab to most places in the world. Right? So, if you're going to be, and then, Hannibal, what they'll do is they'll put their t-shirt with a print on it. Oh man, this $200, man. See, you ain't trying to support black-owned businesses. Well, you're not a business, you're a product. Who are you employing? Because black folk got to get out of that LLC Twitter bullshit where you think you're just going to open a LLC, apparently get some trade lines, and then go for a $150,000 loan. Guess what? You're still a personal guarantor. If you're an LLC, limited liability company, everything is in your name. You're the personal guarantor. So don't let these CPAs, yeah, here, I'll file your LLC for you. Yeah, because they're charging you money to do useless paperwork. You don't know that. As an LLC, you can't have investors. As an S Corp, you can. But then, as an LLC, you can also be an S Corp or a C Corp. You need to know these things. This is why people who are in the life insurance are involved in every aspect of business. I don't care if I hold my securities license or not. So, ladies and gentlemen, I'm going to get ready to shut down. Make sure you hit that like, drop a comment, subscribe, hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial, I did my own paperwork to get a LLC and a Dun and yeah. Oh shit! Listen, you're gonna get some bread if you got a Dun and Bradstreet number. Just so you know. All right. So, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor of Alonzo Hall, your social media insurance bro, whapping and tapping on your head with the financial impact. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.